Welcome along. We're diving into Siemens Energy's second quarter earnings for fiscal year 2025. That's the period from January through to March.
Yep, we've got the report right here.
And our aim really is to cut through all the financial jargon, pull out the key bits so you get a clear picture of how they're doing and where they might be headed.
Exactly. No need to drown in spreadsheets.
And what really jumped out at me first, well, CEO Christian Bruch called it an exceptionally strong quarter.
He pointed to rising electricity demand, which makes sense, and also good project execution,
Right. And because things went so well, they've actually bumped up their forecast for the rest of the year.
which is always a good sign. Yeah.
Definitely. So let's unpack what's driving this. Maybe start with new orders, the business they brought in.
Absolutely. And well, the order numbers are really striking. They pulled in 14.4 billion.
Wow.
Yeah, which is a huge jump, 52.3% up compared to the same time last year. And that's on a comparable basis.
Meaning they've adjusted for things like currency shifts and business structure changes.
Precisely. And this
Right.
isn't just, random. Gas Services had its best quarter ever for orders.
That's best ever.
To date, yes. And Grid Technologies also saw really sharp growth. It shows strong demand, and it gives them a solid base for future revenue, sort of de-risks things a bit.
Okay. And the report mentioned growth in both new kit and the service side of things, right? Across the board.
That's right. Service was up significantly. They called out Saudi Arabia, Canada, Taiwan as particularly strong for Gas Services orders.
Gotcha. Now, they use this term book-to-bill ratio. What exactly is that telling us?
Yeah, good question. It's actually a pretty key metric. It basically compares the value of new orders they booked versus the revenue they billed or recognized in the same period.
Okay.
So Siemens Energy's ratio was 1.45. That means for every euro of revenue they made, they brought in 1.45 of new orders.
Which is good.
Very good. It strongly suggests future growth because they're winning business faster than they're currently delivering it.
Right, which would explain why their pipeline is looking so full.
Exactly. All of those new orders pushed their total backlog to a new record,
Which if?
133 billion.
133 billion.
It's an enormous number. It gives them, a huge amount of visibility for future work, like having a very, very full pantry, as they say.
Okay, so the future looks promising based on orders. What about the money that actually came in during the quarter, the revenue?
Revenue was also looking very healthy. It climbed 20.7%, again on that comparable basis, reaching 10.0 billion.
10 billion. And was that across the board too?
It was. Every single segment contributed to that growth. And the split between new units and service revenue stayed pretty consistent, shows broad strength.
Okay, double-digit growth in orders and revenue. Hard to argue with. So the really crucial bit, how much profit did they actually make?
Right, the bottom line. And this is where things get really interesting. Their profit before any special one-off items, it jumped to 906 million.
Wow, compared.
Compared to 170 million in the same quarter last year. So the profit margin went from 2.1% up to 9.1%.
That's a huge leap. Was that also across all segments?
Yes, all segments chipped in to that improvement.
So what drove that? Was it just selling more stuff?
Well, that was part of it. Higher volumes definitely helped. They mentioned digression effects.
Which means?
Basically, economies of scale. As you produce more, your fixed costs per unit go down, like factory running costs spread over more turbines, for example.
Makes sense.
They also processed orders that had better profit margins baked in from the start. And there was a specific positive timing effect for Grid Technologies, about 100 million.
Okay, so several factors boosting the core profit. But you mentioned special items. How did they affect the final numbers?
Right, so special items are those unusual one-off things. This quarter, they had negative special items of 291 million.
Negative, meaning it reduced profit.
Correct. And that was mainly linked to selling their wind business in India.
Oh, okay.
Just for comparison, last year in Q2, they had positive special items of 331 million, so it swings around.
So when you factor those in, what was the overall profit?
The overall profit after special items came in at 615 million, still up quite a bit from 501 million last year.
And the net income, after everything?
Net income was 501 million. That's a really big increase from 108 million last year.
Which means earnings per share must have jumped too.
Dramatically. Basic earnings per share hit 0.58 compared to just 0.08 in the same quarter last year.
Okay, those are some seriously improved profit figures. What about cash flow? Free cash flow is always a key one.
Yeah, absolutely. And free cash flow before tax also saw a really strong increase. It reached 1.39 billion,
compared to.
much higher than the 483 million in the prior year.
What drove that surge in cash?
Well, partly the improved profitability we just talked about across, almost all the segments. Transformation of industry was about flat, but the others improved, and crucially, strong customer payments.
Getting paid faster.
Exactly. Things like advance payments, reservation fees. Getting that cash in the door early really helps the flow.
Yeah, it gives them flexibility. Okay, let's maybe dive into the segments a bit more. We know gas services and grid tech had strong orders. How did they perform overall?
Right. Gas services. As we said, orders more than doubled, 102.1% comparable growth. Huge orders for new units, plus service growth everywhere.
And revenue.
Revenue is also up significantly, 18.7% comparably, mostly from the service side. And profit before special items rose sharply. Margin improved to 16.1%. So yeah, gas services is really firing.
Clearly a powerhouse this quarter. What about grid technologies?
Grid tech, also very strong. Orders up 41.6% comparably, especially in their solutions business in Europe.
Okay.
Revenue saw substantial growth too, 33.7% comparably across
Mhm.
both products and solutions. And profit before special items more than doubled.
Wow.
Yeah, leading to a really sharp margin improvement, 19.9%.
Almost 20%.
Almost, driven by, good operations, higher volumes, better margins on the work they completed, plus that 100 million timing boost we mentioned.
That is impressive for grid tech. Okay, next up, transformation of industry. Sounds a bit broader.
It is quite diverse, yeah. Orders there were actually almost flat compared to last year, down just 1.5% comparably.
Oh, wait. Why was that?
Well, it's mainly because Q2 last year had a really big single order in their compression business. So being flat this year isn't too bad in context.
Right. Perspective matters.
Yeah.
And revenue.
Revenue did see a clear increase, up 10.5% comparably across all the different businesses within that segment.
And profitability?
Profit before special items nearly doubled there too, hitting a double-digit margin of 11.0%.
Also strong then.
Yeah, driven by steady volume growth, especially in service, and just better quality margins overall.
And I think the report breaks that segment down even further.
It does, yeah, and it shows quite a bit of variation within the segment. Sustainable energy systems saw orders grow over 200%. Incredible, right? Industrial steam turbines and generators were also up strongly, 58.5%. But as we mentioned, compression orders were down 30%, dragging the overall segment's order growth down to nearly flat.
Okay, that really highlights the different moving parts within that transformation label.
Definitely.
Right, now we have to talk about Siemens Gamesa. It's faced, well, quite a few headwinds recently. How did they do?
Yeah, the wind energy division, orders there were also pretty much flat, down just 1.0% comparably.
Any big offshore orders?
No, not this quarter. And onshore orders are still impacted by those quality issues with the 4.X and 5.X turbines. That's ongoing.
Okay, but revenue?
Revenue actually increased significantly, up 16.2% comparably. That was mainly due to the offshore projects ramping up, delivering turbines.
Right, and the bottom line? Profitability, are they getting closer to break even?
Well, it's still negative, but it did improve quite a bit. Profit before special items was minus 249 million.
Still a loss, but better than.
Much better than the minus 446 million in the same period last year.
Okay, so definite improvement. What drove that?
Mainly the progress in the offshore business, getting those projects moving, and some positive effects from how they manage projects. But they're still feeling the pinch from cost increases offshore and those onshore quality problems.
And the special items we mentioned earlier, the sale of the Indian wind business that hit Gamesa's result.
Exactly. That negative 291 million special item sits within the Siemens Gamesa segment results. So yes, progress on the underlying business, but still work to do on the turnaround.
Okay, so putting it all together, strong performance pretty much everywhere except Gamesa, which is improving but still loss-making. This must have led to the updated outlook you mentioned.
Absolutely. Given how strong the first half, especially Q2, was, they've raised their guidance for the full fiscal year quite substantially.
How substantial?
Revenue growth forecast is now 13% to 15% comparable, up from 8% to 10% before.
That's a big jump.
It is. And the profit margin before special items, they now expect 4% to 6%, up from 3% to 5%.
Okay, and net income. They were aiming for break even, weren't they?
They were. Now they expect net income of up to $1 billion.
Wow, from break even to potentially $1 billion. That's quite the shift.
Huge shift. And that's excluding Any potential positive special items from a separate demerger thing happening in India?
Right. What's driving this big boost in confidence?
It's really the stronger than expected results from gas services, grid technologies, and transformation of industry. Plus those strong cash inflows from customer payments, especially in gas and grid.
Which affects the cash flow forecast too, I assume.
Massively. They now expect free cash flow before tax to be around $4 billion for the full year.
4 billion. What was it before?
Previously, it was just exceeding up to $1 billion, so a fourfold increase in the guidance.
Incredible. And Gamesa, still aiming for break even eventually.
Yes, the target for Siemens Gamesa is still break even in fiscal year 2026, and they do expect to restart sales activities for the updated 5.X onshore turbine sometime this fiscal year.
Okay. So most of the business is really performing well. Did they mention any external risks they're watching, like trade issues?
Yes, they briefly touched on the U.S. tariffs announced back in April.
Oh,
They said they're monitoring it, analyzing the impact. Right now, they expect a limited direct hit to profit in the second half of the year, maybe high double-digit millions of euros, after they take steps to mitigate it.
okay. So something they're managing. Good to know. And just finally, geographically, where did the growth come from? Orders first.
Orders saw really strong comparable growth in Europe, CIS, Middle East, Africa. That whole block was up 53.6%.
Okay.
The Americas also strong, up 46.9%, with the U.S. being a big driver there. And Asia, Australia up 67.1%.
Anywhere down.
Germany actually saw a decrease in orders compared to last year.
Interesting. And revenue by region, was that more balanced?
Revenue growth was
Okay.
much more widespread, yeah. Right,
Oh.
comparable growth everywhere. Europe, CIS, Middle East, Africa up 24.9%. Americas up 9.2%, again, strong U.S. contribution. And Asia, Australia up 29.7%. China also had positive revenue growth.
So pretty global demand driving the revenue side.
Looks like it, yes.
Okay, well, that gives us a really thorough look. So wrapping things up, it seems fair to say Siemens Energy had, well, a genuinely impressive second quarter.
Absolutely. You characterized it well, remarkably strong. Driven by that high demand, yes, but also executing well on their projects.
Which led to the big jumps in orders, revenue, and profit.
Exactly. And consequently, that much improved outlook for the whole year.
You know, the number that really sticks with me is that order backlog, 133 billion. It just sounds immense.
It is immense. And what's important there is the long-term stability it suggests, doesn't it? It's a huge pipeline of secured future work.
Definitely.
And maybe the other intriguing detail, as you mentioned, is seeing that improvement, even if still negative, in Siemens Gamesa's profit before the special items.
Yeah.
It suggests the turnaround efforts might be starting to bite. Something to watch.
For sure. And hopefully for you listening, getting this insight into a major player like Siemens Energy helps put the wider energy sector trends into context. You know, that rising demand for electricity, the focus on profitable growth, these are big themes right now.
Yeah, they resonate far beyond just one company.
Mhm.
And maybe a final thought to leave you with. Given that huge upgrade to their free cash flow forecast, aiming for around $4 billion now,
Yeah.
what might they do with that? That kind of strong financial position? Well, it could open up some really interesting options for them later this year or next. Things like more investment, perhaps innovation pushes, maybe even further expansion. Definitely something to ponder as we watch how the rest of their year unfolds.